Hello, everybody. Hello and welcome. And thank you for attending this Your Development live market briefing dedicated to the memory market. My name is Faisal El Kamasi. I'm a global sales coordination and customer manager for Your Development. Based on how DRAM and NAND monitors, the aim of this live market briefing is to provide you in 30 minutes an update to date analysis of the market with a focus on production challenges limiting near-term supply growth in the NAND and DRAM markets. How VIPs, DRAM, NAND, and memory research in semiconductor, memory, and computing division at Your Development, Mike Howard and Walt Cohn will provide a snapshot of the overall market for memory and a few of the major market trends extracted from the YOR's highlight detailed DRAM and non-memory monitors 2022 Q1 edition. Before we get started, I remind you that you are encouraged to submit questions to our analysts during all these events using the Ask a Question windows at the bottom of the screen. Question will be answered right after the presentation. In case we don't have time to answer all of them, we will follow up with you by email. To conclude, this live event is recorded. You will receive tomorrow an email with the link to access the recorded session. So let's start this webcast and welcome Walt and Mike. Walt, the floor is yours.
All right. Thanks for the introduction, Faisal. Hello, everybody. This is Walt. I'll start the presentation with a quick overview of the NAND market and see, and how we see it playing out this year. I only have about 10 minutes to present, so I'm going to narrowly focus on a few key factors that are driving the market this year. And I guess to give away the answer to kind of how we see things playing out, I just want to say that I think that supply is really the story of this year, and that's kind of what we're going to focus on. Okay, so this slide is looking at NAND industry bit production from early 2020 through Q4 of this year. Note this is production, not shipments, so it doesn't include adjustments related to inventory. You'll notice that through 2020 and 21, industry production growth was fairly consistent, ranging from mid-single digits to just over 10% bit growth per quarter. You'll also notice a very steep drop-off in Q1 of this year, primarily as a result of the chemical contamination issue that impacted Kioxia and Western Digital. I'll cover that in more detail on the next slide. Additionally, COVID-related lockdowns in Xi'an late last year and into January of this year impacted Samsung to some extent at their X1 and X2 fabs in Xi'an, China, but really to a much lesser extent. So anyway, we see bit growth, after a drop in Q1, we see bit growth spiking in Q2 this year as the industry returns to full production. And then we kind of expect typical growth through the remainder of the year. For the full year, we see industry production growth in the high 20% range, well below historical averages and far behind last year's growth of about 40%. The limited bit growth this year is not strictly related to the chemical contamination and pandemic lockdowns. I think a bigger factor is actually related to some 3D technology transitions that are happening this year. We do expect pretty steady growth from SK Hynix and Micron as they transition to their 176 layer 3D NAND processes, but we think Samsung and Kioxia/WD are going to struggle as they transition to their 176 and 162 layer nodes respectively. I'll point out when I'm talking about Kioxia, I'm going to probably say Kioxia instead of Kioxia and WD to keep it simple. Anyway, why do we see those two big suppliers struggling? Well, for Samsung, the 176 layer node is their first process that utilizes a 2-stack or 2-deck manufacturing approach. All the other suppliers have already adopted this process, several nodes ago. It's also Samsung's first implementation of CUA or CMOS under the array. This technique involves moving the CMOS logic from the periphery of the NAND cells to underneath the memory cells. This effectively shrinks the die size at a given die density, which leads to more die per wafer, which drives lower cost per bit. Samsung and Kioxia are the last to adopt this approach. And to be clear, what I'm calling CUA goes by several different acronyms. So you may hear COP or PUC, but if you're hearing these acronyms, they essentially mean the same thing. So neither the two-stack or two-deck approach or CUA are trivial to implement. These techniques involve some very complicated and expensive changes, especially the CUA, which leads to increasing processing time, which ends up driving down wafer throughput in the fabs. So, and as a result of this, it's a lot of added complication, and we expect to see below average yields and lower than typical wafer ramps on these nodes this year. So in some ways, you can think of the 176 and 162 layer processes as learning nodes for Samsung and Kioxia, similar to what Micron did with its 128 layer NAND when they had switched the technology from floating gate to charge trap. So net, I think these challenges are going to lead to low production bit growth this year. And it's pretty well timed for the industry, given all the economic uncertainties, demand uncertainties, supply chain uncertainties that we see related to the pandemic and the ongoing conflict in Europe. Next slide. So let's quickly look at a few of the external events that have impacted production this year. First, the COVID lockdown in Xi'an late last year, likely impacted Samsung's X1 and X2 fabs. I've heard that the fabs never fully shut down, but that utilization had to be lowered due to a reduced workforce. I don't think this event was really felt in the market, but Samsung did likely have to tap into some of their inventory to offset lower production. Now, the chemical contamination issue, obviously a much bigger deal, and it's been fairly well documented, so I won't go through all the details, but in terms of how that impacted the market, we think the impact to production was about 17 exabytes, which brought down production in Q1 by about 10%. So definitely a big impact, and it had an immediate and dramatic impact to the market dynamics, and I'll discuss those more on the next slide. Next. Okay, this page is looking at blended quarterly NAND ASPs, again, from the beginning of 2020 through the end of this year. So if we go back to late 2021, before these events, the supply shocks that I've talked about, prices were falling as lingering supply chain issues dampened demand. We thought that these issues, along with pretty weak first half seasonality, would persist through Q1 and into Q2. And as a result, we thought that prices would come down in the mid to high single digit range in both Q1 and Q2. With that factored in, we were looking at blended ASPs of about 9.5 cents in Q2, which actually wouldn't even show up on this chart. We were a little bit more optimistic about the second half of the year. We thought that supply chain dynamics would start to improve. We've already talked about expectations of low production growth. But we were still looking at slight quarterly declines, and we expected ASPs to finish the year in Q4 at just above 9 cents. So fast forward to today, we're obviously a lot more optimistic about where pricing's headed. I'd say that despite the supply shocks that occurred in Q1, blended pricing is still going to fall in Q1 because many of those contracts were locked in prior to news of the contamination. But for Q2, we now expect pricing to be up mid to high single digits instead of down. And we expect pricing up again in Q3 due to the supply chain improvements I talked about, potential for improved demand with seasonality and pretty low inventory levels. Q4 is pretty hard to pinpoint given all the uncertainty right now with demand and what's going on in the world, but we're currently forecasting a slight price decline. But again, the ASP still finishing well above where we were before at about 11 cents per gigabyte. Next. The result of this outlook is another record year for the NAND market, with total revenue likely exceeding $80 billion. I've already mentioned that I'm optimistic about the market. I think that's pretty obvious. In addition to the technology challenges we've discussed, the impact from the contamination issue are likely going to linger over several quarters. Those lost bits aren't coming back, and the suppliers, as a result, are going to have to dig further into their stockpiles to offset production losses. And many of these suppliers were already running on pretty lean inventories. So again, inventory is generally low across the supplier base. And I think the same goes for many of the OEMs that, they may need to tap into their own memory inventories because of the reduced supply into the market. Additionally, given the extended equipment lead times and general shortage of memory equipment, I think it's unlikely that suppliers will be able to outgrow their current production plans to take advantage of near-term price increases. So the chance of a supply-driven downside are pretty low. That doesn't mean we won't see demand-driven downside, but I think given current inventory levels, the suppliers are pretty well positioned to weather unexpected demand weakness. It's obviously impossible to know exactly how the situation is going to play out for the rest of the year, but I think it's pretty obvious and clear that the market's looking much better today than it did entering the year. I think sometimes it just takes a shock to the system, and fortunately for the NAND suppliers, they got that in January of this year. I think I'll stop there and turn it over to Mike to talk about DRAM and come back for Q&A later.
Okay.
Thank you. Thank you very much, Walt. Now, that's very, very interesting presentation. Now, Mike, it's your turn.
All right. Thank you, Faisal. If we could take it to the first slide here. So the situation with the DRAM market is in many ways similar to that of the NAND market. Supply is the most important consideration for 2022. Generally speaking, at a high level, we believe suppliers are going to have a difficult time growing production enough to keep up with demand, resulting in an undersupplied market and as we go through the year, an increasing pricing environment. So what you're seeing right now is our take on supply this year. And we're expecting overall for the market to grow a little under 21% this year, compared to last year where it grew more than 23%. And there's a couple of things that happened in 2021 that are worth going over. First, now there were some constraints last year as far as wafer fab equipment was concerned, but on balance, the market was better supplied than it is this year. So that's one of the differences. Last year, generally speaking, DRAM suppliers were able to get the tools that they needed, whereas this year the availability of WFE is more limited, and it's going to be a limiting factor on production growth. Second, last year we also saw some one-time gains in production throughput related to litho utilization. Again, those were one-time gains that suppliers won't be able to reproduce this year. And so another reason why this year we're not going to see the sort of production growth that we saw last year. Now looking at 2022, let's go through each of the suppliers and see how we expect them to do. So we're looking at Micron doing about 18% production growth this year, with Hynix coming a little bit higher at about 21% production growth. And we continue to feel pretty confident in these numbers. And these are pretty much in line with where we expect demand to grow this year. Now, if we look at Samsung, the third supplier down there at the bottom, Samsung's clearly the most important supplier because they're the biggest supplier with about 45% market share. And we currently have them modeled to grow at about 21% this year. Now, I think there's risk to this number. I think when we look at how Samsung is going to have to maneuver through process nodes and tool new capacity this year to hit 21%, we're starting to see a lot of potential risk to this number. And as we go through and revise our forecast for the Q2 monitor, which will be published later this month, all indication is that we're gonna be looking to lower Samsung's production for this year. based on feedback that we've gotten. So it's likely that Samsung's production is not going to come in at 21%. Now there's still a lot of moving pieces on the supply side, but I would say that the 20.6% production growth that we are currently forecasting for the market is probably on the high end of possibilities. And it's likely that the number that will actually be published at the end of this month will be lower than that. So, I think at the end of the year, when we look back at 2022, we're going to see the WFE limitations have a bigger impact on the supplier's ability to grow production than they did last year. And this is going to result in lower production growth than last year, certainly, and likely lower than the 20.6% production growth that we're looking at on this chart right here. It's very feasible that production growth this year comes in under 20%. Now, if suppliers had an abundant inventory position, some of this low production could be mitigated. Some of the negative side effects could be limited. However, suppliers generally have pretty lean inventories right now. So there's not that cushion of inventory to fall back on should production come in lower than market demand. So again, supply growth this year is going to be a challenge. Anytime we talk about supply, I think it's always worth touching on demand. So if we go to the next slide, take a quick peek at where we see demand coming in this year. Next slide. There we go. So first of all, let's take a quick general look at the demand composition for DRAM. Data center is by far the largest single segment of the market today. And it's the largest by a good margin, accounting for about 35% of total bit demand this year. Smartphones, sort of the second largest single segment at 27% of total demand. Worth pointing out that it was just a few years ago that smartphone was up at about 35% of the total market. So it has steadily declined. Its share has steadily declined through the last several years as we've sort of reached saturated smartphone markets and data centers continue to go gangbusters. And the last big segment down there is PC, which has had a fantastic run over the last couple of years, but it still only accounts for 18% of the total market. Again, PC, as I mentioned, has had a pretty good sort of COVID-related boom. Were it not for the COVID-related work from home movement and the subsequent demand for PCs, PC would probably be down around 15 or 14% of total DRAM demand right now. Now, markets aren't static, and there has certainly been some movement within these demand segments as we've gone through this year, and even in the last 2 months since we published this data. And in particular, over the last few months, there's been a lot of speculation about weakness, specifically around DRAM weakness, as it relates to PC and smartphones. Basically, this is being driven by lower than anticipated unit sales of both smartphones and PCs, lower than what we were sort of thinking as we came into the year. Now, smartphone growth, particularly in China, continues to be challenged by COVID, related lockdowns and restrictions. Even 2 years on, COVID continues to limit the growth of smartphone unit shipments. Not only the production of some of the handsets, but also people's ability to get out there and buy them. Now, in our current model, we have smartphone sales growing at about 1.5% this year. But I think there's reasonable risk to this number. And I wouldn't be surprised if sales were flat or even down sort of low single digits. If we look at PC continues to be sort of enigmatic, PC demand, as we're not able to really see true sell-through demand due to supply chain problems. So, were the supply chain working like it was in 2019, we'd have a much better visibility to true PC demand. But given the current supply chain disruptions, we're still seeing evidence of double booking and things like that. So true PC demand is proving difficult to really put our finger on. And, you could argue that we're currently maybe a bit optimistic with PC unit growth at nearly 5% this year. I would not be surprised if PCs were, sort of down 5% this year, given the feedback that we've gotten from the supply chain. So PC is an area where perhaps our current outlook is a little bit too bullish. But let's say PCs are down in mid-single digits and smartphones are down low single digits this year. The sort of net impact on our total forecast is, maybe 1 or 2% of total demand growth. So even if PC and smartphones come in at the low end of unit growth in 2022, demand still holds up pretty well. And a lot of this is based on data center. So it's the largest segment. And I think this is a segment where, if anything, we're underestimating the growth that we're likely to see this year. Cloud spending remains very strong, and we continue to see spend in traditional enterprise and communications infrastructure. So, over the last few years, demand growth in data centers has been closer to 40%. And given that in the second half of this year, we expect to see the launch of Sapphire Rapids and the DDR5 tailwind it will bring, I think our data center forecast is probably on the conservative end of the spectrum. So when it comes to data center, we could be underestimating net demand by a few percent. So if we combine all of this, what does it mean? It means I think our supply outlook, when matched with our demand outlook, is that we're seeing an undersupplied market, particularly in the second half of this year. And while we may be slightly overstating where smartphones and PCs are going to go this year, I think the balance is that we're probably underestimating data center. And when we combine, again, all of our supply and demand outlook, it looks like an undersupplied market, particularly in the second half of the year, where we expect production to sort of fall off as compared to when it comes to year-on-year growth. So if we can go to the final slide, you match supply with demand, and it informs your pricing outlook. And so I'm going to walk through sort of this pricing, the pricing data that we have on the slide right now. If we go back to, because it's been up and down a bit. So if we go back to 2020, COVID hit and prices shot up, even though we were anticipating a weak market. Customers scrambled to secure DRAM supply. We had a rush on things like PCs. There was a surge in data center demand, again, all driven from the sort of work from home. And so demand in 2020 was generally, while it was in line with what we expected, the demand shifted to the first half of the year. That prompted prices to fall in the back half of the year. 2021, we again saw pricing lift. And this was partly, again, due to the sort of COVID work from home related issues, but it was also driven by the underinvestment in production from DRAM suppliers in 2019 and 2020. You remember that in 2019, DRAM prices fell 50% due to a pretty significant mismatch between supply and demand. So suppliers cut back on capital investment in 2019 and early 2020, and this prompted sort of a lack of production capability in early 21. Now, suppliers were able to catch up, and 2021 actually saw pretty good production growth as we got near the end of the year, and that's when we started to see pricing fall. Now, the last couple of quarters, we've seen prices steadily falling. It hasn't been dramatic. It's been sort of low mid-single digits, Q-on-Q pricing declines. And we're sort of, we expect sort of the lowest pricing of the year to sort of be right now. We do expect pricing in Q3 of this year to turn back upwards and to continue growing as we get into Q4 of this year. Again, bigger mismatch between supply and demand favoring pricing up in the second half of this year. While it's not on the chart, I would also point out that if we project out into 2023, which I mean, I hate to say it, but it's just around the corner now. We do expect pricing to continue up in the first half of 2023. And what this means is we've got a revenue plot up in the top right corner here. You know, this year, essentially prices are flat compared to last year, maybe up a few percent. Couple that with approximately 20% shipment growth, and you can see that you're going to have a substantial increase in revenue. Revenue this year is expected to grow about $20 billion from $94 billion up to $114 billion. Next year, you know, you can do similar math, and it's clear that next year's revenue will easily exceed $130 billion. So definitely in record territory as far as revenue goes for DRAM. The prior record for revenue was in 2018 at about $100 billion. So, you know, things have you know, prices continue to steadily decline as we go through time, but given that shipments continue to grow in the range of 20% each year, we should expect revenue long-term to continue increasing. And with that, that's our take on where DRAM goes this year. Supply constrained, particularly in the back half, with prices increasing, leading to record revenue of $114 billion. And with that, I'll hand it back to you, Faisal.
Thank you. Thank you, Mike, for this presentation. So now it's time for the Q&A session. We received many questions that we are about to answer now. The first question will be for you, Mike. After limited NAND supply growth in 2022, do you expect a rebound next year?
This is actually Walt.
Oh yeah, sorry, yeah, that's for Walt. Yeah, sorry.
Yeah, NAND question.
I'll get the NAND question wrong, so I'll let Walt take that one.
Yeah. Well, okay. So I think it was, do we expect a rebound next year? Short answer is not really. I think production growth is probably going to rebound a little bit, but not a lot. You know, I'm thinking bit supply growth in the low 30% range. And keep in mind, this is coming off of a pretty low base for this year. Yeah, I don't see a lot of wafer-driven growth. There's some clean room space limitations. There's equipment shortages that could persist into next year. So I think where we'll see growth coming is going to be from just mainly technology ramps. So we'll have a full year of 176 layer with maturing yields, along with some early 230-ish layer volume ramps from some of the suppliers, which I expect might go a little bit smoother than 176 layer. But we're definitely not looking at a 40% kind of bit growth year like we saw in 2021.
Okay, excellent. Thank you. Very clear. Very clear. The next one would be for you, Mike. This time, I guess. Do you anticipate the current PMI IC shortage will impact the ramp of DDR5 shipments?
Okay, so this is going to be specifically related to server, which are using a PMIC on the DDR5 modules. No, I don't. I mean, look, impact, there may be at the margin some slight impact, but you know, DDR5 has been on the horizon for a long time, giving suppliers ample opportunity to get orders submitted and to secure supply. For the actual volumes this year for DDR5 are going to be quite manageable. This is the first big year for DDR5, but the volumes are still going to be quite manageable. So, you know, with that said, should PMIC restrictions continue through next year without any relief, then yeah, maybe starting second half next year, we could see some real impacts to DDR5 shipments. But again, I reiterate that the ramp of DDR5 has long been anticipated, and I've gotten reasonably good feedback that the DRAM suppliers have their house in order and that they're ready to ramp DDR5 shipments into server, and PMIC shouldn't be a major hurdle.
Okay, thank you, Mike. Walt, given the micro uncertainties, do you see more upside or downside to your 2022 pricing and revenue projection?
Good question. You know, I'd say more upside for sure. I know I didn't really talk about demand in any detail. Mike touched on it. but I think our current demand forecast is already fairly conservative, maybe with the exception of PC, as Mike mentioned. So I think a relatively weak demand outlook is already somewhat baked into our current numbers. And as I mentioned earlier, there's low inventories across the board. That means suppliers are in a better position to weather demand shocks. They can rebuild their inventories versus unloading product at low prices. On the other hand, OEMs that have low inventories are not going to be able to cushion the blow if there's demand upside. They'll have to get out there and start buying product immediately, almost regardless of price. So I think in that sense, it's more favorable for the upside. And then finally, if you think about it, from the supply side, I think historically the suppliers are more likely to miss their production targets than they are to exceed them. So, and that might be even more true this year, given the challenges with technology that I talked about earlier. So, obviously the possibility for, additional external events is always there. We can't predict what's going to happen there, but if there's, an external event on the upside, the suppliers, are going to be in a real good spot. And if there's a downside event, they at least have, they don't have a lot of inventory to cushion that. So, I think the main takeaway for me is that the NAND market this year has a pretty high floor. I don't foresee a market crash, but it's not hard for me to imagine a scenario where there's quite a bit of upside to our current projections.
Thank you, Mike, for your projections. Yeah, thank you, Mo. Mike, this is a last question. Maybe we have time for a last question. Mike, this one will be for sure. How sensitive is your forecast to the availability of Intel's Sapphire Rapid CPUs?
Okay, yeah. So, this is something that we've actually looked at a lot as Intel's roadmap has continued to pull in and push out. It's never a guarantee when Sapphire Rapids is gonna launch. I think early roadmaps indicated it was going to be 2021. Clearly that didn't happen really. So from my perspective, the best way to think about this is to look at sort of boundary conditions or sort of worst case scenarios. And that would be, so what happens if 0 Sapphire Rapids ship this year? And already this is infeasible because Sapphire Rapids has been shipped to select customers and it's being installed and used by select customers. But assume that 0 Sapphire Rapids shipped this year, or approximately 0. I think you'd see a slight push out of server demand into 2023. I think there are certain customers who have plans for Sapphire Rapids, and those plans are specific to Sapphire Rapids. Now we're calling for, on a server unit basis, we're calling for servers to grow about 6% this year, unit shipments. And so I think worst case scenario, Sapphire Rapids doesn't ship at all this year. And instead of growing 6%, server shipments only grow 5%. I think that's the worst case scenario. We lose 1% of server unit shipment growth. And if we do, if we do rough math on that 1%, we end up with that impacting sort of total DRAM demand growth by about 1%, I think is how the math works out. So worst case scenario, Sapphire Rapids does not ship this year, and we don't get that DDR5 tailwind, and it results in overall demand growing instead of, say, 23% this year, 24%, overall demand only grows 22 or 23%. Highly unlikely. We've gotten pretty good feedback that that Sapphire Rapids is second half launching, and that so we feel pretty confident in that. But again, worst case scenario, it doesn't launch. We lose 1% of demand growth this year. Worth pointing out, though, that demand growth then just pushes into next year. There will be some customers that say, I can't get Sapphire Rapids. Okay, I'll take whatever you have. They have demand for a server and they're going to get it. But those that specifically are waiting for Sapphire Rapids, should they be forced to wait until next year, I think what we see is a pileup of demand for 2023. So a better pricing environment due to that stronger demand in 2023 should Sapphire Rapid push. Again, though, I think it's very low probability that we don't see Sapphire Rapid launch, at least on a limited basis in 2022.
Okay, thank you very much, Mike, for this complete answer. Time is over. The live market briefing is now ending. Thank you again, Mike and Walt, for your time, analysis, and excellent presentation. Thank you. That was very great. To everyone, you will soon receive an email with the link to the presentation within 24 hours. Feel free to share the presentation with colleagues. Finally, please let me remind you that you can find all our reports, tracks, and monitors on our website, hi-micronews.com. So please do not hesitate to contact us if you have additional questions. You can find our contact details on the last slides of the presentation. Thank you all for joining us today. Have a great day and take care.